Currency pairs to watch in Forex. As a trader in the foreign exchange market, knowing which currency pairs to watch is crucial to your success. Whether you are a beginner or a seasoned trader, staying on top of the latest market trends is essential to making informed decisions and maximizing profits. In this article, we will provide you with an overview of the most important currency pairs to watch in Forex, along with some valuable tips and insights. Major currency pairs: Euro to US dollar to Japanese yen, Pound sterling to US dollar to Swiss franc, Australian dollar to US dollar to Canadian dollar. Minor currency pairs: Euro to Pound sterling, Euro to Japanese yen, Pound sterling to Japanese yen. Exotic currency pairs: US dollar to Mexican peso, US dollar to Turkish lira, US dollar to South African rand, USD/THB, US dollar to Brazilian real, US dollar to Russian ruble. Tips for trading currency pairs: 1. Stay up to date with economic news and events. 2. Pay attention to technical analysis. 3. Don't overlook market sentiment. Forex trading is the practice of buying and selling currencies in the foreign exchange market. Traders buy a currency pair when they believe the base currency will strengthen against the quote currency. Conversely, traders sell a currency pair when they believe the base currency will weaken against, or when they think the quote currency will weaken against the base currency. The quote currency, or when they think the quote currency will strengthen against the base currency. One of the most important factors to consider when trading Forex is the currency pair you are trading. There are three main types of currency pairs: major, minor and exotic. In the next sections, we will discuss each type of currency pair in more detail. Major currency pairs. Major currency pairs are the most widely traded currency pairs in the Forex market. They are characterized by high liquidity, low spreads, and generally stable price movements. The major currency pairs include: the Euro to US dollar is the most popular currency pair in the Forex market, accounting for around 28% of all Forex trades. It represents the euro, the official currency of the European Union, against the US dollar, the world's primary reserve currency. US dollar to Japanese yen. The US dollar to Japanese yen is the second most traded currency pair, accounting for around 13% of all Forex trades. It represents the US dollar against the Japanese yen, and is often used as a barometer for the overall health of the global economy. The pound sterling to US dollar, also known as the cable, represents the British pound against the US dollar. It is the third most traded currency pair, accounting for around 11% of all Forex trades. The US dollar to Swiss franc represents the US dollar against the Swiss franc. It is often used as a safe haven currency, particularly during times of geopolitical uncertainty. The Australian dollar to US dollar represents the Australian dollar against the US dollar. It is often influenced by commodity prices and the overall health of the Australian economy. Minor currency pairs. Minor currency pairs, also known as cross-currency pairs, are currency pairs that don't include the US dollar as one of the currencies. These pairs are less frequently traded than major currency pairs and are generally more volatile. Some of the most popular minor currency pairs include: the Euro to Pound sterling represents the euro against the British pound. It is a popular currency pair for traders in the European region and is often used to hedge against Brexit-related risks. The Euro to Japanese yen represents the euro against the Japanese yen. It is often used as an alternative to the US dollar to Japanese yen pair, particularly during times of volatility in dollar. The pound sterling to Japanese yen represents the British pound against the Japanese yen. It is a popular currency pair for carry traders, who borrow in low-yielding currencies and invest in higher-yielding currencies to profit from the interest rate differential. The New Zealand dollar to US dollar represents the New Zealand dollar against the US dollar. It is often influenced by commodity prices and the overall health of the New Zealand economy. The US dollar to Singapore dollar represents the US dollar against the Singapore dollar. It is a popular currency pair for traders in the Asian region. It is often influenced by economic developments in China and other emerging markets. Exotic currency pairs are currency pairs that include a currency from a developing country. These pairs are characterized by high volatility, low liquidity, and wide spreads. Some of the most popular exotic currency pairs include: the US dollar to Mexican peso represents the US dollar against the Mexican peso. It is often influenced by developments in the US-Mexico trade relationship and the overall health of the Mexican economy. The US dollar to Turkish lira represents the US dollar against the Turkish lira. It is often influenced by political developments in Turkey and the overall health of the Turkish economy. The US dollar to South African rand represents the US dollar against the South African rand. It is often influenced by commodity prices, particularly gold and platinum, which are major exports of South Africa. The USD/THB represents the US dollar against the Thai baht. The US dollar to Brazilian real represents the US dollar against the Brazilian real. Tips for trading currency pairs. Here are some valuable tips and insights for trading currency pairs in the Forex market. Stay up to date with economic news and events. Economic news and events can have a significant impact on currency pairs. It is important to stay up to date with the latest economic data releases, central bank statements, and geopolitical developments that could affect the currencies you are trading. Pay attention to technical analysis. Technical analysis can help you identify patterns and trends in currency pairs. By analyzing charts and indicators, you can make informed decisions about when to enter or exit a trade. Don't overlook market sentiment. Market sentiment, or the overall mood of the market, can also impact currency pairs. It is important to pay attention to how traders and investors are feeling about a particular currency, as this can influence its value. Use proper risk management strategies. Risk management is crucial in Forex trading. Make sure to use stop-loss orders and take profit orders to limit your potential losses and maximize your gains. Stay disciplined. Emotions can often get in the way of successful trading. Stay disciplined and avoid making impulsive decisions based on fear, greed, or other emotions.